of all was that like I said earlier, the decision to take a sabbatical, to take a break, and not at that point knowing when I will join back, itself was stressful enough. But I wanted to dedicate all my energies to what I wanted to do for my well-being, for my father, all of that. So this whole process of being financially ready to be able to take that sabbatical was extremely seamless, extremely quick, of course, stress-free, like I said. So thanks to Happy Investor for that. And I also want to, like, so of course, Sujata is my, daily on point person, but everybody in Happy Investor has been super quick. They respond whenever we want, like whenever we have something, they quickly respond to it. So just want to say that just by being with them for these last 3-4 years, all our financial decisions, one of the major ones for me personally was taking that sabbatical, was so stress free. And I think for all you ladies out there, if you are working and if you are you know looking to take that break, you should definitely work with a professional like Happy Investors. So I do have 3 messages for you, to end my talk. First thing is, always plan the unplanned, which basically means that, although nobody wants to fall sick and nobody wants to even talk about being hospitalized, make sure you have planned for everything that we usually don't, your insurances, your term policies, for your future, for your emergency funds, your travel funds, because you never know when you have to travel. It may be like an unplanned travel, right? So please plan the unplanned. Secondly, if you are not already very equipped and very knowledgeable about investments and how to take care of your money and how to grow your money, please outsource those things to people who have that skill, and trust the process. Trust those people, trust the process. Your money will work for you, right? So please outsource that skill if you don't already have that. And finally, whether you're working, whether you're a housemaker, whether you're a student, whatever, wherever phase of life you are in, please take some time out for yourself and focus on what's important. Could be your well-being, like it was for me. So thank you so much. Thanks. I'm glad that I was able to share my story with you all. I hope you have something to take back on. And yeah, thanks, Sujata, for inviting me, and back to you.
You're on mute, Sujata.
Thanks, Divya, for sharing your story with us. I'm sure our guests for today would have learned a little bit from what you went through. And if anybody has any questions, you could drop them in the chat box and then we'll pass them on to Divya at the end of the session. I hope you all enjoyed, or at least I hope you all got to know a little bit of what Divya had to share. And we will now invite Nalini to share her part of her experiences with us. Nalini, welcome to the afternoon session. And over to you. I shall make you the host so that you can then share the screen.
Sure.
Yeah, you can.
Okay. Let me do it. Sorry. Sorry. Okay, you guys see my screen, right?
Yes.
Yes. Do you see it?
Yeah, you need to make it full screen.
I did. Yeah, it's just taking little time.
Yeah.
Am I good now?
Yes.
Okay. Sorry, it's just I'm using dual screen, so it's kind of messy. Yeah. So let me just tell about myself. Thanks, Sujata, for inviting me for this. Damn, it's not working.
Yes.
Oh, okay, yeah. So as Sujata said, I'm Nalini Devakonda and I'm a working professional, working in IT for the last almost 20 years now, almost 20 years, not 20 yet. Wow. So I was in US for a long time, for almost like 10, 12 years. And then we moved back to India just before COVID. And before COVID happened, I'm a single parent, but two little boys who are 10 and 9 and 7, 6. And so since being a single parent, it's difficult for you to focus on, for me as also to focus on work and kids. And then I also has this passion for travel. It's been there since childhood. I love to travel to new places. When I was working, when I was studying, I never used to stay at one place, and it was always on the move, running from one place to another place. It's just that I liked seeing new places, going to new places, trying out new foods. Seeing a lot of new places was always been my passion. So that's what I always wanted to do. And but then when you are working and then you have kids to take care, it's just life becomes difficult, and then you are like you feel that you're stuck with doing the regular chores, taking care of the responsibilities, but then you don't want to leave your passion. So that's when I found Happy Investor helping me a lot with respect to my passion. And let me just go through that. So my concerns were, like, as I said, I was in US for a long time, and then we moved back to India, and it was all new for me. As a parent, it was new. I had to set up the house, look after things in here, and then the COVID had started, so there was no maid to do things, and I had to manage everything alone. Well, I was earning quite good. When I had a job, so it was going good. Had a good amount of money, sufficient enough, but I didn't know what to do with that, right? So I know that I could save up money, but in what way I can save up money, or what I should be doing with that money? How do I save up? Looking after the kids' education, myself, the future, pension, and everything. So I didn't know, like, how should I be looking at it. And I'm the one who doesn't know much about investment a lot. Never really thought about that until then, probably, or still now I don't know much. I rely completely on Happy Investor on that. So I had seen this in US when I was working, that there were like people who does CFAs, who go to CFAs for their finances, so that I always thought it was for the people who had hell lot of money, and then they have the affordability to do it. But then I realized it's for everybody. Even if you have like 10K in with you for savings, you need to look for somebody who could help you how to invest that. And I think that's I realized very late in my life, but it was better late than never. So I said, okay, I should look up for somebody like that in India as well, so that I could start investing now, at least if I have not done it in US. So that's when I came in touch with Dipesh and his team through a friend, and I started my journey with them from then on. And it was when we started, it was I had made it very clear to them that my passion for travel has been there, and then I wanted myself to go out and explore things, as well my kids. So the vacation part was always a very important factor for me, when I was taking this decision of saving money for future, for education and stuff. So that has been a point which I made it clear to them from the day one, and they knew that's been there, like one of my key factors to consider. So in that way, they help a lot, to make a bigger picture about how the investment has to happen, when I should be withdrawing how much money, and what's my plan, when I'm gonna buy a house, or if I'm buying a house, if I'm buying a car, how much I should be investing, how much I should be saving up, how much should be my loan, things like that. A lot of things which we do not usually think, right? Like, at least if you are new, you do not know what to do with okay, I am getting, say for example, I'm getting 1 lakh of money, and then I don't know what to do with that. I'm just going to buy a house and do 50,000 EMI. We think that is okay, but then when you go to Happy Investor or any professional investors and financial advisors, they would tell you how much you can afford to do it without affecting your day to day expenses, or without affecting your future savings, which involves everything. That was very important for me to take that decision, being with uh, Happy Investor. So what I did, as I mentioned, I went to Happy Investor, Dipesh and his team, and of course Sujata was not there when I joined, I guess, but then she later came in, and it was really very good for me to have that woman interaction with the person. It was more easy than being with Dipesh for me. um, And so, as I said, it was I don't know much about the expense, the investment part or the share market or anything. So I completely relied upon the happy investor. Blindly followed whatever they told. I said, okay, I'm just gonna do things with you. I was happy the way it went for the first 6 months, 7 months, and then I said, okay, this is it. I am not even gonna look at my portfolio anymore. And that has always been there. That's been their advice when they send out to you monthly newsletters. They do talk about a lot of all these things. So it was very easy for me to just blindly follow whatever they did, they said, and just do it, not think too much about that, because I had so many things to take care in my life. I said, this is it, and this is working good for me. And I was able to save up a lot of money for my vacations, for my going out with my kids, or for other vacations whatever we planned. We couldn't do much in the first 2 years because of COVID, but it was a good decision then, because I was able to save up a lot of money for those 2 years and take a bigger vacation in the coming next year, including all that money, which we would not usually do it, right? I mean, we would not think so much about the third year of your vacation from the first year, and then save up so much. And it worked out really great for us in that way. So that's how it happened. And I had enough money, but then I was not disciplined. Probably that's why I needed to was looking up for somebody, and I was able to do that discipline with happy investor in my life. Money comes in on the first day of your month, and then it goes out by fifth. That's what I decided. By fifth of the month, my savings are gone, and then I'm happy with that. Whatever is the left out, that was a decision taken by me and the team, wherein we decided, okay, this much amount is enough for me to take care of my monthly expenses, including my birthdays, including shopping, including everything. And then, okay, the rest of the money, even before you think about what to do with that, it's gone from your hand, and you don't see it going, and then you are happy that at least that amount is saved up. So that was really good with happy investors. And then, as I said, it is more of a custom made for my requirement, because of my passion for travel, and being a single parent, single income. So but they do help you with a lot of things which you request for, and it's mostly custom made. It's not like one plan which fits for everybody. They do talk to you, they ask your plans, or what are you planning to do, what are you planning to do for your kids, how much you are able to take it ahead, and then help you with all that, and then give you a real picture, like today's education cost is this much, and in a year, or like when they grow up, when they become graduates, that the education cost is this much. So this is how you should be planning, and this is what you should be thinking of saving, which we usually don't end up thinking. Even men, women, we don't do it, but investors, they are really good with that, and it gives you a bigger picture and a more detailed picture about how it should be working for you. And yeah, so as I said, they do send out newsletters every week. Most of the time I do not know anything about happening in the market. I don't watch a lot of news, I don't watch a lot of TV, so I don't know. But then every time when I get a newsletter, I make sure that I read it, so that I know what's happening in and around me with respect to the finances, whether the market has gone up, down, how is it affecting my portfolio. Every Even before I could raise a question, there is already an answer from Dipesh and his team about it. And I most of the time I get to know about things only through their newsletter, and I wouldn't know about it before. So that's how it it happens for me, and I'm happy that they do address a lot of things even before people uh, go and ask them. I remember a couple of times when the budget happens, and the next day or that evening you already have a Q&A from them, telling you everything which you should be knowing. I was like, I don't even know that it's happening this way, right? But then you read it, okay, okay, so this is all happened. So this is like actual news for me to know things happening in the finance industry.
Right.
um, yeah, and so lastly, my news, my message to the ladies out here, in fact, just not ladies or anybody, whoever is here. We women, we tend to believe that we do not know a lot about investments. So even if we have little amount of money, what we do is we just go to like my mom, or my brother, my father, and then say, okay, I have this much money, what should I be doing? And then they tell you things to do, which are in a way right, but then they are all age-old tradition of saving money, which probably they would tell you, invest in gold, or buy a flat, or buy a, some land, or things of that sort. I do not say they are bad, but they are old traditions of just doing things. But there are like uh, diverse ways of investing money, and which are much more reliable, and then give better return than the old traditional way of saving money. So please, if you have anything of that sort, please find some financial advisor or experts to do the thing for you, rather than doing it for yourself, or asking somebody in your family, just because they are elder to you. And it's always good that we end up going to a professional, because I, being an IT professional, right, when somebody comes to me, I try to I tell them that I'm a professional, so I know things better than anybody else in my department or in my field, because I'm a professional for that. So that in the same way, you should also go to a professional for handling finances. We'd go to a doctor for uh, treatment. We don't go to anybody or just look at Google out and then try out a lot of things when you are seriously health is concerned. So just the way health is concerned, you go to a doctor. Just the same way, when finance is concerned, go to a financial advisor or professional expertise who can help you with the investments. And that's about it. And it should never be a problem when you are addressing your passion. When you are looking up for your passion, you shouldn't be much worried, and then the passion shouldn't make you feel stressed out. uh, so that way, happy investor helps you with less financial stress and more of passion, and then freedom for what you want to do in your life. So that's about
Th-
it,
Thanks,
Sujata.
Nalini. Thanks, Nalini. And we're very happy to note that we've been of great help to you, and that you think we've added a lot of value to what you are and how you live your life today. So,
Definitely.
okay. So we have our third speaker for the evening today, Parna Subramaniam, who is a brand consultant and works with us, as well as is our client as well. And she will be here to share her part of her journey with us, with a specific request that she came to us with. Over to you, Aparna.
Thanks so much, Sujata. Hi, everyone. I'm going to be talking to you about how you can, or how you should be thinking about contributing to your parents as they get older. I'm just going to quickly take you through a few points, which is my experience, and I'm sure might be some of your experiences as well. So I've been a client of Happy Investors now for almost 10 years, I think, coming up on 10 years. I work independently as a brand and communications consultant, working with nonprofits, social impact organizations, brands, and corporates. I live with my family in Bangalore, and my goal for this specific ask of Happy Investor was really how I could ensure financial independence for myself and my mom. Because I'd been working with Happy Investor for 10 years, I was already confident in their ability to help me understand how I need to be planning for my goals and how I can redirect my finances to make
Ready?
sure that
Okay,
my money was
5
working.
minutes. We're going.
I wanted to do something so that I could add to my mom's financial security as well. And I needed guidance in terms of how to structure either my investments to also contribute towards that corpus for my mom, or how I could support her in meeting her expenses so she didn't really feel dependent on me, which would require some of her own money, but also a little bit that I was putting towards that kitty as well. And since I had that concern and I already had a ready sort of advisor and Happy Investor, it just made sense for me to reach out to them to see if they could help sort of help me with this as well. What they did for me was essentially to set up an SIP. And for those of you who are not familiar with what it is an SIP is a systematic investment plan, which means there's a certain amount of money that you're putting every month into a corpus. It automatically gets debited from your account, which means you don't have to worry. It's just something that's automatically going out. So how Dipesh told me about it when we first started was to not think of it as my money at all, that this was the money that was going towards the SIP, and it's something that would just grow and compound. And I could look at what it was in 20 years or later, right? So I set up an SIP specifically to contribute towards a larger corpus for my mom. Then what they did was started an SWP, which is a systematic withdrawal plan, which was what they used the SIP that I'd set up was to set up a regular monthly credit into my mother's account for her to manage her regular expenses, which meant that she didn't have to come to me every time she needed something. It also made me feel more comfortable knowing that she had money of her own, that she didn't have to depend on anyone else for whatever she wanted to do, whether that was meet her friends for lunch, travel, buy something for the house, whatever it was. She was free to do what she wanted with her money. And their very simple SIP plan, followed by the SWP plan, provided a lot of financial security for my mom. But what I think it also did, in addition to that, was to ease any sort of anxiety around money that either I or my mom would have had, because I think we underestimate how big a role money plays in our lives when it comes to just financial well-being. And I think knowing that there was a plan in place just made it much easier for me to know how much of money I should be working towards, to know how much of the money is going towards my mom, and that my mom just felt happy that, you know, she had money of her own and she didn't feel like she had to depend on anybody else to pay for anything. And my message to you, ladies, is that you start with small contributions, which will substantially compound over time. So over a long period of time, and whether that's 5 years for you, 10 years, 15 years, 20 years, it'll help you to build substantial savings over time. Obviously, the earlier you start, the better it is for you and the better your money will grow. I do think that it's important to understand the importance of financial planning specifically to support your parents, if that's something that you need to do. Because I think that what Happy Investor did was also sort of project finances for me to say what would be my expenses today for a medical emergency would be vastly different for a medical emergency 10 years down the line. And I need to be thinking about how I can pay for it 10 years down the line, right? Which means that you're automatically tweaking how much you put aside almost every year. And I think that I know that I have benefited from getting an expert to manage my finances and tweak my financial plans based on changing life goals, because it's not going to be the same over your lifetime. And I would recommend that you do the same as well, because I do think that having somebody objectively advise you from a third party point of view, as opposed to, say, a friends or family, no harm there as well. But always good to have an objective third party advise you on how best you can leverage your money and make it go the distance, is something that's definitely benefited me. And if you're not already working with a financial planner, then I think that you should consider at least having a conversation to see how they can add value. And I mean, I'm a little biased, so I'm going to recommend Happy Investor. But even if you choose not to go with them, I think that it's worth your while to start thinking about it from a long-term strategic point of view and not stick to just traditional instruments of investment like FDs and gold. And there are different ways to invest in gold, which Sujata will speak to you about next. But I do think that it's time for you to think about how you can diversify your investments to make the most of how much your money can work for you. Thank you so much. And if you have any questions, just drop them into the chat box and I'm happy to take them later. Sujata, you're on mute. You have been for a while.
Thank you, all of you, for sharing your experiences with us. We have a couple of questions, but we will take that at the end so that, we can also gather a couple of more questions. Now, we come to one more part of the session where we will look at how to buy gold smartly. Because we all, as women, are, connected with gold at different stages in our life. And we will be looking at how to buy gold smartly. Just a moment. Yep. So can you all see my screen now? Yes. So we shall be looking at how to buy gold smartly. What we'll cover today is how women and gold are connected. What are the traditional gold buying options that we know about? What are the positive and negatives of these traditional gold buying options? And what is the smarter way to buy gold today and why it is smart? So women and gold, typically a woman's relationship with gold or gold jewelry starts at her wedding, where, she receives gold at her wedding, at least, or she buys for herself. She receives from her parents, or she receives from her family that she's got married into, or she also inherits gold from either side of the family. Typically, that's how a woman's relationship with gold starts. And then she's told, you should invest in gold. Then she goes looking for options of investing in gold. And then these are the options that come up. So you have the very traditional method of investing in gold, which is a monthly scheme with jewelers, where they tell you either you contribute for 10 months or 11 months, and then they give you 1 month free. And then say at the end of the scheme, you can purchase gold for the value that you have invested. Or then you have schemes like zero making cost, zero wastage, etc., which is, popularized or advertised in the newspapers. And then, of course, you have gold biscuits, which is a pure gold purchase, has its advantages, but it's a very traditional way of holding it. And then, of course, you have the sovereign gold bond, which is which is offered by the government, and one can invest in that as well. So these are the typical traditional plans that are there. Now, each of them is good and not so good in different ways. So if we look at that, what is the positive of these traditional schemes? At least the jeweler scheme and buying gold biscuits, it can be done in cash and there's no major documentation required. That is an advantage for those people who are dealing with cash. But once you've entered into this, either the gold biscuit buying or the traditional jeweler scheme, then your purchase is restricted to the same outlet from where you have entered into that scheme. So that is a certain level of restriction. Then once that scheme matures, then you have to make the purchase at that maturity date. There's no option for you to take it back as cash, nor can you say, I will pick it up later. Then you also do not have the flexibility. Suppose you got into a 12-month scheme, you paid for 6 months, and at the 7th or 8th month, you are not able to make that for some reason. You cannot go back to them and tell them, look, I can't pay for the next 2 months, but I will, make up for it in a month or two later. These are the negatives or, the disadvantages of the traditional schemes. But and of course, the sovereign gold bond, which is offered by the government. So the advantage there you have is that it is from the government. So it's a secure investment. It's also digital gold. So you don't pick up physical gold when you invest. But it's a one-time investment. So when the gold bond opens up, you have to have that money with you at that point in time. It may happen that you have it. It may happen that you don't have. And once you put that money in, you got to hold it for 8 years. So it's well suited for a long-term investment in gold with a specific, goal that, yes, 8 years down the line, I'm going to buy gold. It works. So if these are the various options that are there, what's the smarter option? So the smarter option is to buy gold is through gold mutual funds. Now, what somebody would say, what's gold got to do with mutual funds? Now, that's what people asked when we're told to invest in equity through mutual funds. What's mutual funds got to do with equity? So typically, mutual funds allows you to invest in the share market, but without the same level of risk. So similarly, the gold mutual fund allows you to invest in gold in smaller units as and when you want. So you can invest any amount at any time. If you want, you can invest on a monthly basis, a fixed amount, or whenever you have an amount that you want to put into the gold mutual fund, you can add it whenever you want. Whenever you add, whether it is on a monthly basis or at a one-time basis, whatever you have added on that day, the relevant units of gold are credited into your account at the current market price of gold. So suppose you're putting 10,000 every month. Every time you put in 10,000, 10,000 rupees worth of gold units are credited into your account. And then you're free to withdraw anytime the market rate. You can withdraw anytime, you can withdraw any amount. And if you're not able to make that contribution for a couple of months, even that is fine. That flexibility is also there. And then at the end of it, when you withdraw it, the best part is you have the flexibility to go and buy gold from wherever you want. You're not restricted to go and buy only from a particular outlet, particular brand, or a particular jeweler. If you've got into their schemes, then you have to buy there. If you've bought a gold biscuit from them, you got to go exchange it only with them. But here, you can withdraw it as cash and go and purchase wherever you want. So the amount of flexibility that you get when you invest in gold mutual funds, it beats the kind of discomfort that you would have with the traditional outlets. So if we were to compare between the traditional methods and the gold MF, then this is what it is. Flexibility in the plan to stop, start, or discontinue or add more whenever you want. Not available in the traditional plan, nor in the sovereign gold bond. Sovereign gold bond, you got to enter when they open, you exit when it matures at 8 years. The gold MF, you can add, remove, stop, start at your convenience. Purchase options in a traditional plan, you don't have that. You got to buy it where you've enrolled for the scheme. With a sovereign gold bond, yes, when it matures, you get it back as cash. You can go and buy where you want. Similarly with gold MF, when you withdraw cash and you can go and buy where you want. Is part withdrawal allowed? No, that's available as a facility only with gold MFs. Can I withdraw as cash? Yes, you can with the sovereign gold bond or with the gold mutual fund. And the main part of it, is it a regulated investment? Is it something that is secure? Is there a security to it? Is somebody monitoring what is happening? That doesn't happen with your traditional jeweler schemes. Tomorrow, if that neighborhood jeweler says it just disappears, you can do nothing about it. So the sovereign gold bond is a government guarantee, and the gold mutual fund is monitored by the financial markets. So this is a smarter way to buy gold. You can add it whenever you want to add, whenever you have the money. You can take it out whenever you want to plan to buy the gold. And the best part, when you take it out, if you do not want to buy gold, you have benefited from the increase in the price of gold. So and then you can go and buy whatever you want. So it gives you all those options. And also, you start saving in gold and then use it for someone who wants to buy gold of their choice. Then that person is not stuck with the kind of gold that you have bought in advance and kept or that you have received. So this gives you the flexibility to pick up gold as you wish. So now I hope that was interesting for all of you. I have a couple of questions that some of our viewers have put in. So I shall pose them to our guests for today. And then, if necessary, I will also step in. So the question to Divya was, what did you do when you took a sabbatical? What did you do about your SIPs? This is asked by Rachna. So
Yeah,
I'm putting it forward to you.
Sure, Sujata. Rachna, first of all, thanks for the question. I think I mentioned that, the best thing about mutual funds is that you can pause and you can restart and things like that. So that's what I did because I was not earning for those months when I was on leave. I paused my mutual fund SIPs, and I restarted when I joined back work. And I understand. I think I also got a message from you where you said that you are unable to do continue your SIPs because you also have you don't have any savings because you're on a sabbatical and stuff like that, and that is where your emergency funds come into picture. So for me, I had my emergency fund. I did pause my SIPs, but I had my emergency funds to back me and to for my expenses for those months. But at the same time, if you have like more emergency fund, you could continue it's completely up to you. You can even reduce the amount. For example, last 2 years back when we bought an apartment, we reduced our SIPs. There are various things that you could do with mutual fund. It gives that flexibility. And honestly, I mean, talk to Sujata. She's a better person to answer these questions. She knows what she did with my thing. So, that's what I mean. Mutual funds, you have those flexibilities, and they are not locked. Things like that. So yeah, I mean, I personally, I stopped my SIPs for that period of time. That's what I did.
Yeah. So when one plans a sabbatical, one can always look into the plan and decide whether one needs to stop the SIP for that time, or one can keep that running based on the existing emergency corpus. So it's a flexible plan. It can be planned as per the person's requirement. So the other question was for Aparna. Somebody has asked if you wanted to set up the SWP for your mother, for how long did you have to contribute on the SIP?
Thanks to whoever asked that question. Again, I think that Sujata would be a better person to clarify how long. As far as I know, it's not stopped. From the time that it's been set up, I've just been putting in money. So it's not like there's been a end goal. I also prefer to just think of that money as not my money and put it into my mom's corpus, because at any rate, it would come back eventually to me, I guess. So I didn't have a particular corpus because it was just for ongoing expenses. But if it was for a specific thing, like maybe a holiday she wanted to take or something that she wanted to buy or an investment in a new house, then I think that there would be a quantifiable time by which that goal needed to be achieved. But since this is an ongoing one, I just treat it as another SIP where I continue to put money into it, keeping a 20 to 25-year horizon. I hope that answers your question.
Thanks, Aparna. Just a simple mathematics that, whatever you spend today, you will be spending twice of that amount in 10 years. So if your investments grow at a better rate than that, then if you are contributing about 10,000 today, then 10 years later, you should be able to take out 20,000 per month and run it for a while. Specific requirements, we'll have to work it out as per your plan, as how much you really need to generate at a particular. So say 5 years down the line, if you want to generate a monthly income of an X amount and keep that running for X number of years, then we work back and let you know when you need to start contributing and for how long. So you could reach out to us on our numbers and we shall be happy to take care of that as well. There was another question there saying, what happens when I take out money from gold investments? Is there capital gains? Yes, there is capital gains are applicable to gold. And typically, if you take out gold after a year, it is treated, up to 3 years, if you take out money from gold, it is treated as a short-term capital gain. And that is taxed as per your income tax slabs. So if you are in the 20% tax bracket, your capital gain is taxed at 20%. If you are in the 30% tax bracket, then it's taxed at 30%. But if you take out gold after 3 years, you get the benefit of the increase in the gold price, and then only the balance growth is taxed at 20%. Okay, so I hope that answered your question, Rachna. Any further questions from anybody else? For further queries, you can always reach out to us on our numbers here. I'm available on 96200 96201. Our office numbers are 9886 98851. And thank you, everybody, for having spared your time to be with us here. And I hope it was an eye-opener for all of you, because for us, it was an effort that we took to, share some information among the educated women, because though we are all educated women, there are some gaps that we always have. And it's always nice to know a little bit of extra information that helps us in the long run. Thanks, Aparna. Thanks, Divya. Thank you, Nalini, for sparing your Saturday afternoon with our guests. And
thank you, Sujata.
we will also be sharing this video with you, so you could share it around with your circles. And for those who couldn't make it today, we will be sharing it out to them as well.
Thanks,
Sounds
Sujata.
good.
Thanks everyone who
Thanks a lot.
came out on a Saturday.
Thank you so much. Thanks,
Thanks.
Aparna, for everything.
Thanks, everyone.
Thanks all three of you.
Bye-bye.
Bye.
Bye-bye.